Hey traders, greetings. It's Samantha LaDuc from LaDuc Trading. I wanted to go over a very exciting play, DDD, which is 3D Systems, that has been on my radar and recommended to clients for months. In fact, back when it was $7.35 and SSYS in sympathy at $15, I had recommended to clients. And right up until just a month ago, December 17th, in my clients Slack channel, I had also continued to press this long theme, as you can see, from DDD and SSYS. They're related 3D plays. SSYS, I said, actually is better run, but DDD has the better short interest. That has continued to perform ridiculously well, including 3D tagging the 200 week, which was first before SSYS. I said that will be the price target. I'll show you the charts in just a minute. And then a few weeks later, on the 7th, it decided, obviously, after 3 months of already poised and recommending this as a long to the 200 week price target. 3D bounced pre-market over 28%, and then that was it. The shorts had to start covering. That day I had mentioned high short interest. The $14.50 price target is obviously going to have to move up to 18, and before I knew it, literally within the hour, that had also moved strongly past my 18, pressing the long thesis, why short. DDD was up 100% with a 25% short interest. So this was taken from my Slack channel, which is a workspace for clients where I post my trade ideas, my trade setups, option flow, macro themes, intermarket analysis, annotated charts. And back on the 8th, this was also a follow-up saying, okay, now be careful. Monthly resistance is actually this 29.88. And I got it exactly when it tagged and came back down on that particular day. So it had already, moved up 257% from the short squeeze candidate list that I had recommended again on November 24th, and it looked like it was about ready to erupt. So it was one of those that was just left for dead. It was part of my factor rotation theme of basically momentum into value, and in particular because it was an oversold value theme. Sure enough, this chart has proved very impressive in its resilience here. It did tag 30. It came down pretty aggressively down to 24, but it did hold also, which is kind of interesting. On the 3 and the 8 day, tagged the 8 and then went right back up to this 30. So it is still in play. Shockingly, I know, especially for the shorts. And SSYS is another one that was basically in sympathy, running higher, recommended out of this Bollinger Band squeeze. Here's the 100 week for the first price target. Here was the 200 week for the second price target. It pulled back and had a very shallow tag of the 10 week, which is the strongest indication for me of a continuation trend play. This is DDD. You can't see it as clearly, but I'll remove all that. This was the one that had the highest short interest and exploded higher, has not come back anywhere near its 10 week, which shows to me that that's much more exuberant, if you will, speculation and short covering than the SSYS, which tagged and followed it. But I am expecting a wide aura of volatility for both of these plays, but they have been phenomenal continuation plays, and not seeing them done as it relates to a trend play, but extremely extended. Would not be surprised if they come back down. In time, it could be quite a violent reversal back down. But in the meantime, these are the price targets that have been hit technically with precision, and I'll let clients know, alert when I see the next setup, long or short. These stocks can be quite explosive and profitable. What I like about timing the pullbacks in these very short squeeze candidates is that it literally looked like it was going to stabilize at the 8-day, and I mentioned as such before it took off again from $24 to $32, launching again at 10.06, and surely it did. Short squeeze candidates have been extremely profitable for my clients, from GameStop that I recommended at $4 to DDD and SSYS and several others. If you are looking for the technical entries and exits to support your trading on a stock or option basis, I invite you to try LaDucTrading.com. Thank you very much.